Day trading is a fast-paced trading style focused on capturing short-term price movements within a single day. It's less about predicting the distant future and more about reacting to high-probability opportunities in real time with disciplined execution. A professional day trader starts by analyzing higher time frames, like the 4-hour or 1-hour chart, to establish market bias, identify strong support and resistance levels, and recognize patterns that can influence price. Then they shift to lower time frames, such as the 15-minute or 5-minute charts, to time precise entries and exits. The golden rule is simple: preserve capital. Only enter when the setup meets all criteria, and exit quickly if proven wrong. In this style, risk management is everything. Most traders risk only 1 to 2% of their account per trade and aim for a minimum risk-to-reward ratio of 1.2. Looking at the current 4-hour XRP USDT chart, price action is compressing within a well-defined range between 3.10 support and 3.33 resistance. Within this zone, an ascending triangle is forming, where higher lows are pressing against static resistance. This pattern often signals building buying pressure and potential for a bullish breakout. The 7-period moving average at 3.275 is providing micro support. The 25-period moving average at 3.221 is a medium-term retracement zone, and the 99-period moving average at 3.10066 is acting as a major demand area. Volume analysis reveals that each push toward 3.33 comes with increased buying activity, but sellers have repeatedly defended this level, causing temporary pullbacks. This creates a high-tension coil in the market, whichever side breaks. First is likely to see a strong directional move. If price decisively closes above 333 on strong 4-hour volume, the next logical move for a day trader is to drop to the 15-minute or 5-minute chart, wait for a retest of 3.33, and look for a bullish confirmation candle to enter long, targeting 3.40 and 3.45 with a stop loss below 3.29. However, if price fakes out above 3.33 but closes back below on the lower time frame, it can set up a short trade toward 3.26 and 3.22 with a stop above the rejection high. Another scenario to watch is a breakdown of the ascending trend line near 3.26. If confirmed by high red volume, this could lead to a sell-off toward 3.22 and 3.10. Throughout all scenarios, traders must watch for liquidity hunts. False moves above resistance or below support meant to trigger stops, and wait for candle close confirmation to avoid being trapped. In short, XRP is in a pressure zone where both bullish and bearish plays are possible. For day traders, the key is to react, not predict. Wait for the breakout or breakdown to confirm with volume, then execute with precision on the lower time frame. This combination of structure, confluence, and disciplined risk control turns a chart like this from a guessing game into a calculated opportunity. On the 1-hour XRP USDT chart, we can see a more granular view of the same structure from the 4-hour time frame, but here the story becomes sharper for a day trader's decision-making. The market had been forming an ascending trend line since August 12th, with price making higher lows and pressing toward the horizontal resistance near 3.33. However, the latest candles show a decisive breakdown from that ascending trend line, accompanied by an uptick in red volume, signaling that short-term bullish momentum has weakened and sellers are beginning to dominate. The 7-period moving average, currently at 3,3002, has crossed downward through price action, showing immediate intraday pressure. The 25-period MA, 3.2797, is now close to being tested from above, and a confirmed close below it could open the door for a drop toward the 99-period MA, 3.22240, which aligns with a major horizontal support level from earlier in the month. The volume profile is crucial here. Notice how breakdown candles are backed by stronger selling spikes compared to the modest green bars during the last consolidation phase. This indicates that smart money could be taking profits from the recent rally and possibly positioning short. From a day trading perspective, the breakdown of the trend line creates two immediate opportunities. Short trade setup. If the price closes below 325 on strong volume and then retests it unsuccessfully from underneath, it would signal a continuation to the downside with targets at 3.22 and 310, while keeping a tight stop loss above 3.27, 3.28 to control risk. Bull trap reversal. If this drop fails to sustain and price quickly reclaims the 3.28, 330 zone, with strong green candles, it could have been a liquidity sweep. In that case, a rapid bullish move toward 3.33 could follow, and day traders would watch lower time frames for a breakout entry. Right now, the H1 chart warns us of an early shift from bullish compression to potential bearish control. For disciplined day traders, the next few candles are critical. This is where patience and confirmation matter more than prediction. Jumping in too early could mean getting caught in a false move, but waiting for the retest and volume confirmation could turn this breakdown into a high-probability trade. In the fast, unforgiving arena of day trading, hesitation is the difference between catching the wave and getting crushed beneath it. Right now, XRP is at a knife's edge. The 4H chart shows coiled energy ready to explode, and the 1H chart has just given us the first crack in the bullish armor. The market is whispering its intentions through structure and volume, but only to those who know how to listen. The next decisive move won't wait for your comfort. It will reward the prepared and punish the distracted. In this game, fortune doesn't favor the brave. It favors the disciplined. When your setup comes, execute without fear, because the chart won't ask twice. And if you're serious about sharpening your trading edge, learning to read charts like a sniper, and building the mindset of a consistent trader, subscribe to Financial Freedom FX. Your future self will thank you for it.